You may know from my other videos that I go around and I train Excel and I get a lot of accountants' questions. And I always say, I'm not an accountant. He is. This is Ian Shipley, who's a chartered certified accountant, has been for the last 33 years. Is that right?
That's right, yep.
That's right. And for the last 27, a partner in Prentice & Co. in Cambridge. Is that right?
Partner since 2004.
So we've just got a few questions that we've got from you guys that we can just ask Ian, and hopefully we'll get some really cool answers. Actually, there is one extra, there was extra question. It was just a general one, because sometimes people say, they're starting up a business and they're thinking, do I need an accountant or not? And that's the big question, because they might be thinking, I'm going to spend thousands and thousands of pounds with an accountant when I haven't even earned my money. Yeah. What would you say to that question? Do I need an accountant or not when I'm starting my business?
It depends really what your business is, quite frankly. There's probably no straightforward answer. I would say go and speak to an accountant, because most accountants will at least give you the first half hour, if not hour, free. There's lots of resources on the internet and HMRC's website. So that's another good resource. If you haven't earned any money yet, you don't even know whether the business is going to start, then probably just go ahead and without an accountant, and probably 6 months or a year later, when you know the business is up and running, you've actually made some money, or you can see a future for it, then see an accountant.
Yeah.
Certainly, if you start earning lots of money very quickly, then you do need to see an accountant, because there'll be issues like VAT. If you start employing people, you've just got payroll issues and things like that. So
okay,
that's really what's important.
That seems good. Yeah,
that was quite a good answer.
I know, it's great. Absolutely fine. Yeah, fine. That's great. And that was the first question, actually. Okay, right. So we've got number one. It says, in order to prepare yearly company accounts, what's the basic information that you need to know? Right.
Well, the first thing would be we need access to your accounting software if you're using accounting software, or spreadsheets or cash books. We need bank statements. We need invoices. That's purchase invoices and sales invoices. If you're VAT registered, we need your VAT records, VAT, copies of VAT returns, and also we need payroll records if you employ people or you're a limited company and you employ yourself.
Brilliant. Great. That's quite a lot. I'll tell you what I'll do. I will put everything in links down below, but that's the basics that you would need to know.
That's the basics. I would also point out that not all businesses would have those records.
Okay.
A lot of consultancy businesses may not have much in the way of purchases, because it's mostly their own endeavours. Some businesses only invoice every month, so they'll perhaps only have 12 invoices. So it sounds a lot of records or a lot of documentation, but it actually may not be. Those are also the things you need to keep for the taxman, and he can ask for anything going back 6 years.
6 years.
If he has an investigation. And you also need to make sure you keep diaries and things like that to prove your work, or when you're on holiday, or gaps in your work.
That makes sense. At 6 years as well. I always thought maybe it was 7 years. So that's something I misunderstood.
Well, in 6 years, we tend to advise people to keep their records for 8 years, just so we've got a cut off either side.
Yeah.
And I also ought to mention, of course, is that if you store things on some sort of electronic media, so as PDFs, or make sure you've got backups, and make sure whatever you're storing, it is able to be retrieved, because of course we've all been through floppy disks, CDs, DVDs, memory sticks, and the cloud now, of course. So things do change.
Yeah, good advice. All right, what we got? Do clients need to use accounting software? I suppose this is talking about specialist accounting software.
Yes.
Yes.
It's an interesting question. I would say at the moment you can probably get away with using Excel as a spreadsheet. It may be we're going to be forced to use, or people are going to be forced to use specialist software We've got something called Making Tax Digital that is coming in. It's already coming for VAT, and people who prepare VAT returns can use Excel with Excel spreadsheets with an additional bit of software that allows the spreadsheets to communicate with HMRC's software. It's a bit like a bus. It moves the data to the taxman's computer, and unfortunately, in a few years' time, that bus is going to be taking return journeys and allow them to look at your data. So that's the reason why computer programs and software is becoming more and more relevant.
Okay.
We don't know how much longer those software or spreadsheets are going to be allowed to be used, and that may be forcing people to use software like Access or QuickBooks, Sage, Xero, those sort of things.
Yeah. Okay.
So that's one issue. Making Tax Digital, as I've said at the moment, is coming in for personal tax returns.
Okay.
And that's going to happen from 2024.
2024. Okay,
Yeah.
good.
And it's then going to happen for companies from 2026.
Oh, okay.
So it may be that we're all forced to be using software. Your accountant can help. We tend to offer a service where the client uses QuickBooks or Xero, and then we can look into what they're doing every month and tidy anything up if it needs tidying up.
Oh, okay.
So they do the bookkeeping, and these bits of software are all fairly straightforward. They're quite easy to use, and I'm amazed how many people can use it who would possibly struggle, which is a fair comment because we're all good at what we do, but not necessarily somebody else's job. But it's amazing how people manage to cope with these things.
Wow. So maybe in the year 2024 and 2026 that the HMRC can have a little nose about with your accounts, possibly.
Possibly.
Yeah.
I think that may be a little bit later on, but it's coming down the line. So people who keep their own records, make sure you don't put comments that may suggest something. So don't put the word, is this a dodgy invoice or something like that, because that may attract the artificial intelligence.
I think so.
To look at think something's happening, and the main reason is because the taxman thinks that there's a lot of tax that's being lost, not through fraud or deliberate concealment, but actually just through genuine errors. And so they think that looking at the books and records may help them resolve those errors and obviously raise more tax, which at the moment, the current economic climate is, of course, what they need.
All right. How do you want receipts and expenses broken down was another question.
So breaking down expenses and also receipts is often dependent actually on what the client wants, because they will be using that information. If they have different types of sales, they may want those broken down into sort of general classifications. If you're a farmer, you have arable stock and you have arable crops, and if you have cattle or hens or something, you may want those broken down into various sorts so you can see how well they do. If you are a shop, you may want your sales broken down, or if you're a pub, you'll certainly want them broken down into wet and dry sales to see how well those different areas work. In terms of expenses, again, it's often led by the client as to what they will find useful. I would say as a minimum, you'd want to be having separate expenses for goods that you are reselling. So if you're a shop, cans of baked beans, loaves of bread in one section. You'll want to know what your rent and your rates are, and your insurance costs. So perhaps that's another section. You'll certainly want to know at the moment what your light and heat costs are. That's a very important one. Not least if you're running an office, you may well decide that it's a good idea to send people to work from home.
I'm sure many
things rise too high. So that would be an essential cost, essential expense to show separately. And then often stationery, postage, advertising is put into one category. Telephone is put into another category. Computer expenses in another category. And then probably most other things would be just kept in a section called miscellaneous or sundries. One last expense to break down is capital items, so things like computers, which aren't actually treated as an expense, although often people will treat those in their records and allow the accountant to treat them properly.
Do clients, do they need to print off all accounts? I remember the days where we came in with you, we had a big, huge box that we came in. Is that necessary now?
It's not necessary now to print things off. It depends what sort of person you are and whether you're risk averse or not. I tend to print off quite a lot of paperwork myself, just because I find it easier to go through a file of paper rather than trying to look up things. But that's for correspondence. Certainly in terms of invoices, it's perfectly acceptable to have electronic PDF copies of them. Just make sure, as I said earlier, that you make sure you can retrieve those documents and they can't be corrupted or the storage means you're using doesn't become obsolete.
Good answer, that's very clear. It saves me arms as well. So if VAT registered, do you need to know the VAT figures, and do I need to include the VAT figures when I give my accounts to you? I suppose it's because the customer submits their VAT online now,
they do,
so
yes.
That's why that question was there.
So VAT, yes, it's important that we have access, or any accountant has access to your VAT records. They're useful for preparing the actual accounts themselves. But also, even though you're responsible for preparing your own VAT return, an accountant may well be able to look at the VAT returns in relation to the accounts and make sure at least the two things reconcile and tally with each other. The worst case scenario would be the VAT returns are quite a lot different to the actual accounts you're submitting or the turnover, and you need to make sure that the two at least are reconcilable and fairly similar.
Yeah.
Okay.
That makes sense.
One of the things that the VAT man, when he comes along and he has an inquiry, is he'll often ask to see what the annual accounts is, and he will add up the boxes on the VAT returns and compare them with the accounts to see if there's any major discretion.
Okay, so this is is there any difference in the way a sole trader would present their accounts as to you, as opposed to someone with a limited company?
The answer is not a huge amount of difference, basically. The accounts are prepared very similarly for both. For a company, you will have different categories, so you will be paying yourself as a director a salary, which you won't be paying as a sole trader. As a sole trader, you will be taking out your profits as what they call drawings, which is not tax deductible. But as a director, you'll be taking a salary out, which is tax deductible. So that's important to have a separate section for that in your records. You will also, as a director, be taking dividends out, which are not tax deductible for the company, but which are taxed on your own personal tax return. So again, it's important to make sure those are fairly obvious what they are, so no confusion arises. And then you may, as a director, be taking out money to repay yourself if you've lent the company money in the past, or expenses such as mileage and so forth, which you'll pay on your own personal credit cards but reclaim from the company, and or expenses like that. And again, it's important to keep those separate. There's a few things, but in general, the records are very, very similar.
Yeah. Actually, just a little thing about dividends. There's a question actually people do often ask when I go out and about. Now it is true that all dividends that you take out of a limited company are taxable by you. Is there, because it used to be before you had a little amount that was tax free?
So with dividends, the first £2,000 is it's not actually tax-free, it's taxed at zero rate.
Okay.
And the reason for that is that it's all to do with the tax bands, basically. Just allows it is just basically a zero tax.
Yeah.
Effectively, if the only dividends you take out is £2,000, you will not have a tax liability on those.
Okay.
As long as you haven't got dividends from any other sources.
Yeah. Okay.
So it's 2,000 in total. So if you just have dividends from your own personal company, it's £2,000, and it's £2,000. And if you have Tesco shares and also shares from your own company, and those Tesco shares give you a dividend of £1,000, then you're only be able to get £1,000 out from your company before you start paying tax.
Yeah.
And I should just point out in the autumn statement, that was yesterday, so that's the 17th of November.
Yeah.
The Chancellor announced that he was going to reduce that £2,000 zero rate tax band for dividends to £1,000 next year, and then £500 a year after.
Wow.
So it is reducing.
Mm-hmm.
And the problem with that is the reason that we had the £2,000 allowance or zero rate was to stop people who've got small portfolios of shares, such as retired people, from having to complete tax returns. And that, unfortunately, now drag in quite a few people possibly to file tax returns because they'll have to pay dividend tax on those small amounts of dividends.
The last question, Ian, is just a general one, really. Is do you have any tips you'd like to share for people for providing clear, easy accounts that make it easy for you?
Keep it simple in your records. Don't have too many costs analysed out or too many categories of costs. Quite a good tip when you're keeping in paper invoices is if you have several small invoices like the sort you get from petrol stations, staple those onto one piece of A4.
Mm-hmm.
It allows you to file them in a lever arch file nice and simply and tidily. And just basically keep all your records and all your purchase invoices. Your accountant may not need to see them, but if there is any queries or questions, then at least it's there. And even if you don't provide your accountant with your purchase invoices, you could easily be able to ping it over an email if there's a query about something.
Brilliant, excellent. Thank you so much, Ian. I'm sure everyone who watches this video will really appreciate the time, the effort that you've gone into preparing. We sent the questions to Ian before, so you can have a look over and think about them. So thank you so much.
Okay.